Forbes, for the first time ever, is ranking the highest earning hedge fund traders. Tell us what that was like putting the list together this year.
You know, we have a lot of experience doing this stuff, you know, putting lists together of the very wealthy. And when you're talking about hedge fund managers, you were really talking about the most secretive, wealthy people in the country and in the world. So it was a challenge, but we kind of knew what we were doing. And a lot of them are billionaires and are on the Forbes 400, so we knew a lot about them.
But a lot weren't. I mean, that's part of the fun, is we found a lot of new billionaires. Right?
That's right, and they're people who, hedge fund managers who weren't on our billionaires list that should be there, and you know, we put them there. For example, like Paul Singer at Elliott Management, hedge fund pioneer. He's been around for a long time. He's a billionaire, and you know, by doing this project, we were able to put him there.
I think a lot of people don't appreciate the tremendous money machine that hedge funds are, where we're used to calculating net worth, and net worths go up and net worths go down. But these guys, they're taking cash off the table every year. Explain for a lot of people how this works.
When run properly, these hedge fund firms really are, as you say, money-making machines. Usually they charge their investors 2% just right off the top of assets under management just for showing up. Then 20% of profits. Sometimes some managers like Steve Cohen charge a lot more than that. And then in addition to that, they have their own capital in the fund as a result of all these rich fees accumulating and compounding year in and year out. And so the gains, you know, in a good year, just from the amount of money they have in the funds, could just be enormous.
So managers who match the market in a good year with a lot of assets under management will make tens, hundreds of millions of dollars for doing nothing.
That's right. Well, for just matching the market.
Correct.
That's right.
Which you know,
which they weren't able to do last year, and that really brings us to the amazing outcome of 2011.
Now, so this was the worst year. You're saying the worst year ever in the hedge fund era, as we're calling it, the last 15 years, when hedge funds have really become the dominant force in terms of how people make money on Wall Street.
I think so. You know, they were the average hedge fund was down 5% last year. The average equity hedge fund was down 8% last year, and that's just from the hedge funds that bother to report. So, you know, it's skewed higher just from the beginning.
And the markets overall were
eked a 2% gain. The S&P was kind of up a little bit last year, so that's just a terrible result.
Well, which is ironic, because hedge funds are supposed to reduce risk. They're supposed to make hedge risk during bad years, but still do well during good years.
It was a bad year, and especially like we've seen other down years like 2008 when they were down, but the stock market was down much more. So I think comparatively, last year was an especially bad year, and yet the top 40 hedge fund managers still made $13 billion.
$13 billion.
That's right.
Now, is this their fund or personally?
That's personal. That's what they earned last year.
These 40 guys, and they're all men, correct?
There's one woman, Alita Braga, in London, but other than that, they are all men.
Made $13 billion cash.
That's right.
Amazing, amazing. So let's go over some of the big winners. Number one, I mean, it's one of the great hauls in the history of capitalism. Ray Dalio at Bridgewater, who made $3 billion, you're calculating. Tell us how he did that.
Okay, well, Ray Dalio has really become the star of this industry. I mean, his firm has $120 billion in assets. So it has a lot of money to, you know, when their funds go up 20%, as they did last year, you know, operating on such a large asset amount, that's a lot of money right off the top. And, you know, last year, he's just done a great job ever since the credit crisis of guiding Bridgewater to profits. And last year, you know, he bet on German bonds, on U.S. government bonds, on inflation-protected securities. These were all big, good bets for him. And, you know, they made a lot of money.
And how much of his money is in the fund versus other people's money?
You know, it's a $120 billion firm. So, you know, the majority of that is not his. Because he's done so well, you know, everybody wants to be in Bridgewater. And as a result, his percentage of assets is much smaller than you would usually see, you know, in a case like this.
So because he's getting 2%, though, on that big a base, he's going to be making money as long as that fund, you know, stays open with those kind of assets.
Yeah, no, he does have a lot of costs. You know, they got over 1,000 employees. You know, there's a big institutional firm with serious costs. When you make 20% returns with $120 billion, that's a lot of profits.
James Simons, who made, you calculated $2.1 billion. Now, this is somebody who year in, year out seems to make $500 million, $1 billion, like the way you know, somebody makes $50,000 just year in, year out. How do you do it this year?
We don't know. because he's a mathematical genius and he runs Renaissance Technology. I mean, he technically retired, but he still kind of is involved, and he certainly enjoys the profits of this firm. And it's the quintessential, as they say in the industry, black box. We have no idea what they're doing. Mathematical geniuses, code breakers. He did code breaking for the Department of Defense, and every year it seems they do well. And last year their funds, 33% returns.
And he charges a lot more than 2 and 20.
That's right. So. That's right. Although with him too, he has a lot of his own net worth in the fund, and that's where the vast majority of his earnings are coming from.
Okay, we have Carl Icahn third, $2 billion.
I think last year was an incredible year for Carl Icahn. He's been at this game for so long. He's been shaking up markets for decades. And I think even by his standards, last year was incredible. He returned all his money, he gave it all the outside money back to investors, said, I'm only going to invest my own money, I don't want to deal with the outside people anymore. And he bet on companies like El Paso and Motorola Mobility, and over 30% returns last year.
On a 0-100 scale.
That's right.
Scale, so.
That's right. And he just had a good year and made a couple $2 billion. And I think even by his standards, that's amazing.
Now, Stevie Cohen, another perennial powerhouse,
right.
A guy many people think is the best trader. A lot of people said he's an insider trader. However he did it, $600 million is not chump change.
You think of the distractions. First he was, bidding on the New York Mets. Now he's still going after the Los Angeles Dodgers. There's an insider trading investigation that always seems to be swirling around him. And still, the firm does great, net returns of 8%. The fees are very high, as we discussed. So, they just keep on, knocking out big returns every year.
Number 5, David Shaw, again, another perennial, $580 million for 2011.
He's not running the firm D.E. Shaw anymore day to day, but he's still kind of involved, and he still is involved in the investment management business, making strategic decisions. And because he has played such a, he founded the firm and has a lot of money in the firm, he still benefited tremendously from what they did last year.
Where's John Paulson?
John Paulson is not on the list. John Paulson lost.
Now, this is somebody who made about $4 billion during the housing crash in 1 year, and he's not even making $40 million last year?
No, he lost $3 billion last year. Most of that was because of the disastrous returns of his funds, that were down 50%. And so his personal loss was just from his own money in the fund was so enormous that offset whatever fee income he was able to produce.
Yeah, 2% only goes so far when you lose $3 billion.
That's right. That's right. It was a bad year.
It's great. Thank you again, Nathan, for doing this, and I think a lot of people are going to be very surprised.
This is what a terrible year in the hedge fund industry looks like.
That's right.
Guys making $3 billion, $2 billion. the bottom guy makes $40 million. That's a bad year in the hedge fund industry.
It's tough work if you can get it.
That's right.
Thank you.